Okay, let's kick off. Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where every morning we take a quick half hour to review the market open in Asia and where the direction of travel may go through the day. And I'm delighted that we have our resident bull and our resident bear in the house this morning, and Amrita will be the referee maybe. Omar Najia, Global Head of Derivatives of BB Energy, your beloved WTI has broken through $60 a barrel. And I know you always say that no market goes straight up all the time, but this market's going straight up all the time, isn't it?
No, I think we had a nice long period of a few days of consolidation. Then we broke out again. But I mean, when WTI is behaving, when crude's behaving this way, I don't think it's pointless trying to pick a top and saying this is where the market's going and that kind of stuff. And I think basically a lot of people are waiting to get long. A lot of people are convinced of the fundamentals of crude, of the technicals of crude. So if you like, the question is, after this pullback, where will we get to? And as far as I'm concerned, the higher we go, the more this pullback will be, if you like, less interesting to get long. But I think unless we get, quite a few dollars higher, I think everybody's going to want to buy on any kind of, pullback. So, we'd like to see the market pull back because we'd like to get even more long.
And in essence, the market jumped this morning out of the gate in Asia up quite a significant leap. I think looking at the news coverage seemed to be struggling to find a specific reason, and they jumped on some scuds, I was going to say, but drones coming out of Yemen, which seems a little bit fluffy for a reason to jump the kind of percentage points it did. Anything you would identify, Omar, why we've got a jump this morning? My sense was the Trump trial ending quickly gives stimulus back on the front headlines.
Well, I mean, I like to look at the market more technically. I think it's technical, quote unquote, driven. And I think they like to use whatever's in the news, whether it be Middle East, whatever, or Trump something else, or it's really cold. That's always a good one, especially in the winter, because nobody expects it to be cold in the winter. So market goes up is because it's cold. But I think it's technically driven. Again, I think there's a lot of people waiting to get into oil and WTI and all the rest of it. And I think, the more, that's why it's finding it difficult to kind of pull back, because buying interest really is there. So, let's see what happens. But I don't want to try and pick not a top to the market, but even a short-term top, because I don't know where that is. So, trend is your friend, and you wait and see. But I think on a dip, it's a buy.
Let's bring in a new guest to the show, Amrita Sen, Head of Research Energy Aspects. I'm sure she's familiar to many. Amrita, bull or bear, these markets are going up on fundamentals. I can't but keep reminding myself that there is 10 million barrels of idle supply sitting on the sidelines of this market, and yet it feels like we're in a really tight market. It seems somewhat counterintuitive.
Hey, good morning. Thanks for having me. No, I think you're right. Like ultimately, you can't have a sustainable rally until and unless we have got, I would disagree with the 10. I think spare capacity right now is, even including Iran, probably more like 8. There will be a lot of that spare capacity that will struggle to come back given the scale of shutdowns we've seen. But yes, of course, you can't get a sustainable rally. But to Omar's point, I mean, that's more of a long-term top, right? Doesn't mean prices can't continue to rise now, given Saudi's actions, 1 million barrels per day off the market. I think cold is the key reason. On Friday, when I was talking to traders, the view very much is our numbers are showing between at least 5 million barrels of US production is going to be shut because of the Permian freeze-offs. And we've already seen some of the European refiners try and buy alternative cargoes on Friday because they are worried that you're not going to get as many crude exports out of the US, but equally refineries are falling off. So product exports could also be impacted there because of the cold. Again, it's not new, but it kind of does happen and help every year. But yeah, right now, I will say that not just because of the supply side, I really do think demand is coming in stronger than people expected, including ourselves. I mean, look, we've probably been the least bearish in terms of the demand declines last year versus the IEA, the EIA, OPEC Secretariat, but we are fairly conservative this year. The vaccine rollout will take time, but I think what we are seeing instead is non-OECD demand is back above pre-COVID levels, which is very, very impressive. And in the OECD, US and Europe, demand's actually not fallen by as much as expected. And the vaccination program is going very, very quickly and well. And I do think one thing is that we'll get a bigger bang for our buck vaccinating Western consumer-driven economies, because this is where gasoline and jet fuel demand is really hamstrung. Whereas in the non-OECD, things are, give or take, relatively back to normal, at least on the oil demand front. They tend to be more manufacturing driven. So I agree with Omar. I think, in the short term, the momentum is absolutely higher, but I also will caution that we are probably pricing in all the good news now. And actually, when the good news comes, which is in the second half of the year, we might just flatline, and we have to absorb the Iranian barrels coming back.
When Santa Claus finally arrives, Mike McGlone, there won't be so many things in his bag. Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Mike, despite all of the bullish sort of sound and sentiment, the IEA last week did, for the fourth month in a row, revise down their demand recovery for 2021. And also included a forecast of a 1 million barrel a day decline in demand in the first quarter. That doesn't sound very bullish. Your thoughts, Mike, this freezing morning in New York?
Yes, well, good morning. It's actually above freezing for the first time in a little while, but good morning.
But on your shorts.
Yeah, exactly. I do. I really appreciate my colleagues' views, but I have to admit I disagree. I was bearish crude oil before COVID, and now they're at these significant levels. And I agree with Omar. You can't just nail it with one level, but I'm quite bearish now. First of all, I think there's too many conditions the market's depending on to go higher. Yes, momentum is working for well, but if you look at Brent, the average price 2019 before COVID was around $64 a barrel. So we're pretty close there, but you need four key things really for the market to keep going up. The stock market has to keep rising, virtually guaranteed. If the stock market drops 10%, crude oil will drop 30%, just based on how it has been acting and based on its beta and based on its correlation. We need US demand, global demand to pick up more than estimate, as you said, EIA. That's one thing that's a factor in demand estimates. Estimates were being revised downward before COVID. That's been my trend for many years, is downward demand estimates. People are just overestimating how much petroleum the world's been using. Then you look at US supply. The average cost of production in US now is below $40 a barrel for many shale producers. So that supply is coming back. To me, that's just a matter of time. OPEC excess production is the highest ever as a percentage of global supply, really near 10%. I think Amrita's numbers might be closer to 9%. But global estimated potential demand, OPEC's got the greatest supply ever. That's not an environment you can get bullish crude oil. And then you just look at what's happening with the technology. We're completely quickly replacing. There's just not the kind of demand there used to be there. We quit replacing vehicles with EVs. Yes, that's bigger picture. But to me, the bottom line I want to end with is human nature. And that's one thing I've been shocked by, being one of the few people back in the office, is people in this country are just not going back to work unless they absolutely have to. They're not driving. They're not using their vehicles. So that old time unleaded gas demand is just not going to come back the way it was before until they're forced back. And I think there's just way too much optimism for that to come back. So I cannot be bullish crude oil at these levels. To me, the major risks are downward. I can be bullish things like the metals, because they do have demand and supply constraints, and they're just an ESG constraints. But
could you be bullish gas? Are we going to see $1,000 for PMBTU? Or what's the gas story, Mike, in the US? Seems gone quite bonkers.
It's very local. And the key thing to point out about US natural gas, at $3, it's still below that key $4 level, which is significant because when the first time the Fed went to zero in 2009, that was the average price. So to me, natural gas has been one of the best indicators on the planet, US natural gas, of deflationary trends in energy. And I'll end on that because it's just this massive increase in production. And everybody in this country, everywhere, is using natural gas for electricity, for heat, yet the price still can't come up because there's massive increase in technology and bringing on more supply.
Omar, your thoughts on that, and also just how vulnerable or how concerned are you about that supply? Obviously, starting with the Saudi 1 million barrels a day, which clearly is a big factor in this upward lift in the first quarter. We could be weeks away from that coming back. Generally, how fragile is this market, do you think, in the midterm to new supply?
Look, I mean, I really always like to, I mean, it's really interesting when you start to want to kind of, zoom in, and you go really in, and then you go really in and really in and really in. And by the time you end up where you want to be, you're totally confused. So if you're betting money, I like to look at the kind of broad picture, right? So very simple stuff like glass half full, glass half empty, optimist, pessimist. Demand coming back or not coming back. We're at $60 WTI. Do I see it going? Is it more likely that we get to $90 or $30? Stuff like that. That kind of stuff gives us direction and impetus and all the rest of it. And I'm telling you, if this market, we've been having discussions in the office. We're long stuff, we're long refinery margins, we're long cracks, we're long. And every week we basically say, what if it comes off? And the only answer is, if it comes off, we are going to buy it. We are going to buy it, and it doesn't come off. And it's the same thing basically with Bitcoin. I've read a lot about the articles on Bloomberg. Great articles, by the way. Totally agree. And that's to me, it's an indication of risk appetite. And everybody kind of coming to the table and realizing and those articles, Doug, are quite amazing. I love them. But again, I'm I like oil, I like Bitcoin. I'm not at all a fan of gold and silver and all that kind of stuff. But higher equity markets, I think higher. Everything needs a pullback. It'd be great to see a pullback, but I think a pullback is not going to be doom and gloom. Is going to be opportunity. And I'm not saying that, people have to go nuts and chase and all the rest of it. I'm saying as somebody who wants to be long in the market, it's getting frustrating that this market isn't correcting a little bit to allow more money to come into it. And I think that's an indication of a quote unquote bullish market, new highs, higher lows, higher highs, trending market, et cetera, et cetera, et cetera.
Amrita, your thoughts on that and the vulnerability as well, vis-a-vis where does OPEC Plus go from here? Does it buy into the sort of euphoric, all things are indicating strong fundamentals? I mean, at the end of the day, interest rates are still near zero. There's 8 or 10 million barrels off the market. I mean, this is hardly all whistles and bells of a positive economic strength. There's still fragility here, no? Or how do you see that, particularly from an OPEC Plus point of view? What do they do next?
Absolutely. There's a lot of fragility. They understand that. But Saudi's objective was to start drawing down inventories and draw it pretty quickly. Weather has helped with the cold weather. I think some of the demand numbers you're seeing is because of that. Saudi Arabia will bring back its 1 million barrels per day cut, most likely in April. It was very clearly a 2-month cut. Our conversation suggests they are going to bring it back in April. The rest of the group, they can do about 0.5 million barrels per day every month until they get to phase 3. So you'd expect at these price levels, the total OPEC plus production that can come back, including the Saudi million barrels per day, is about 2.35 between now and really April 2022. But you'd reckon they'd do it in 3 consecutive months. UAE, Russia, even Iraq, they will put a lot of pressure to start bringing these barrels back at $60 oil. I still think demand will be able to absorb it. Yes, there's a little bit of refinery maintenance, always is in April. But after that, the demand recovery will be outpacing this volume that comes back. And then you've got Iran. I think you'll get a bit of a dip in the summer. And to Omar's point, I absolutely think people will take that as a buying opportunity because non-OPEC supplies are falling everywhere because of lack of investment. And you'll only see this next year, but underlying momentum is that demand recovery will be higher than the supply recovery.
Mike, the other drivers that we're seeing, and it's obviously underpinning this, the OPEC cut or the Saudi unilateral cut, big factor in Q1, and the further stimulus. Where do you see that going now with the US, with the Trump trial behind us and the Congress getting back to business, so to speak? Do you expect that to happen to the scale that the Democrats envisage? Is it important for the market that it does? What's your thoughts?
Well, I appreciate Omar bringing in some of the other factors that are really mattering for crude oil, and that is, as far as the stimulus, the joke is, okay, 1.9 trillion next. It's just almost a guarantee there's going to be more stimulus, almost a guarantee we're going to get more monetary and more QE and monetary stimulus. So that's where I have to stay bullish, things like gold and Bitcoin, because to me, that's a known that we all expect. It's very unlikely that organic demand is going to eliminate the need for that. And then I look over on the other side of the aisle that I see the highest correlations ever between most commodities, most notably crude oil, and equities. And that's why I say, okay, there's a pretty good risk here. And I want to narrow that down to an inflection point I see kicking in that's going to matter. Now, we have the most expensive stocks on the planet, Tesla, now kind of tweaking and putting its money into Bitcoin. I can't analyze gold anymore without looking at Bitcoin, because to me, it's stealing all the flows. It's the gold of the future. And to me, that's what's all potentially hitting an inflection point. Here's a question for the panels that I want to ask you. So if the price of Tesla goes back to where it was just 3 months ago, that's $400. That's a 50% correction. That means a massive potential problem with the whole entire stock market. Just a little correction, 10% maybe, which means crude oil is down easily 20, 25%. Yes, everybody wants to buy the dip, but that's always how it always works until it stops working. So to me, that's what I have to watch in a macro view. I can stay bullish gold and Bitcoin, but I can't, and certainly because gold's had its correction. Gold's corrected 15%. But most of these other markets aren't, and they're going to happen. It's just a question of time. And this is to me the speculative froth where you're supposed to just stay away and be careful.
I'm wondering, without getting into the weeds of it, whether Bitcoin is the future gold or the future dollar. I'm starting to think it might be the dollar. Omar, your thoughts on some of that point that Mike mentioned, and why are we not seeing this sort of correction for buying purposes, if you like?
Look, WTI has moved plus or minus from about 33, or call it $30 to $60, right? So it's made a $30 move, right? So usually when it finds a top, wherever that top is, it's going to correct. It's going to correct, let's say, somewhere between 30 and 50%, right? So there's a $10 to $15 move coming, right? My point is, if that $15 or $10 move is going to come from 60 to 50, everybody's going to buy it. If it comes from 65 to 55, right, you might get a little bit more. So that's the point. That's why basically right now.
What's the difference?
I like this market higher, because if it basically tops out here and goes to 50 or 45, who's going to sell? Who's going to sell at $45 or $50? Strategically, I'm looking for the oil market to go to where? So that's one. On the point, on the kind of, Bitcoin and gold and this kind of stuff, gold, there's been so many companies, so many banks, issued with fines and all the rest of it. I mean, they call it gold fixing for a reason, right? So if you want to buy gold, the only thing you can buy is paper. It's very difficult to actually buy real, quote unquote, gold. And people are worried about manipulation and big banks and sitting in a dark room and deciding what the price is and doing all this stuff. So that's the reason why people like Bitcoin, because it's transparent. It's not quote unquote controlled. The price isn't quote unquote fixed, transportable, 1,000,001 reasons basically. But yeah, people, I think the idea, that something's been around for 2,000 or 3,000 or 20,000 years. I mean, gold is scarce on this planet, right? But in the greater kind of whatever, the universe, solar system, whatever you want to do, it's not exactly scarce. So I'm
not to get down a rabbit hole of Bitcoin and gold, because that's a very deep one. And I think it's getting deeper every day. Amrita, enjoying your comments in the chat room. Refining margins are pretty critical to underpin this market. Where do you see the outlook for that going, and can it become supportive to the market?
Look, you've got to be pretty crazy to be bullish refining margins. Yes, sure, it's going to pick up from current levels, because I think the broader point across crude and products and margins is that the supply needs to come back to meet the recovery in demand, whenever that is. And we can all disagree and agree on the level of demand growth and how much it's going to go up by, and working from home, but it is going to go up from current levels. So yes, margins will pick up, but we had, and we've been at Energy Aspects, even in 2019, structurally bearish refining margins because of the overcapacity. We have so much new capacity that in the east, and we've got Al Zour and Jazan starting up Jazan just about starting up in Saudi Arabia, Al Zour by the middle of the year in Kuwait. That's 1 million barrels per day more refining capacity. We need far more closures in the west. The US market just about managed to balance. They've had quite a few closures. But Europe, there's a long, long way to go. We think another 5 million barrels per day of refining capacity needs to shut in permanently before you can get a sustainable rally. Yes, of course, like I said, we will get a pickup from current levels, but are we going to go back to the 2018 highs? I mean, remember, even 2019, before COVID, we were negative margins in Q4 19. I think that's the structural problem we have in this market. Doesn't mean that you're going to get weak crude, though, because the more refining capacity there is, people still need to buy the crude. But yes, I think there's been this struggle where if you're looking for refining margins to give you the signal that things are looking better, you're not going to get that very quickly.
You said earlier about vaccinations moving in a positive way, and obviously you're sitting in London this morning, where it is going quite well according to the general relative terms, but many places are not, and the rest of Europe in particular struggling. US is having some progress, but my question is ultimately, given all of the other pieces, are vaccination numbers and success or failure important to the future of this oil rally?
Oh, absolutely. I think ultimately this is about mobility, right? I mean, oil was disproportionately hurt last year because mobility was so hamstrung. And this year, whether it's gasoline, I think everybody in the world is going to get in their car and drive, even if they can't fly. People are quite sick of being at home. And I think one of the things we see outside of the US and even within parts of the US, the biggest rally in gasoline, or the biggest uptick in gasoline demand, comes from leisure driving, more so than just working from home. Working from home can be about 40%, depending on which city you are. So yes, I think vaccination is critical. The point I will make is that, yeah, Europe is lagging behind. We're putting out a note today, actually, about our expectations around when 60% of the population gets vaccinated in the different parts of the world. And pretty much by the summer, the big nations are managing to vaccinate, or that's the expectation. Not emerging markets, but developed markets. But the thing is, emerging markets, either you've got China, who's already pretty much got this under control, or you've got India and Brazil, where they just haven't cared about the same kind of restriction. So it matters less, particularly for the gasoline side of things. Jet, yes, we will all need to be vaccinated before air travel really picks up. And that's why we're not expecting jet recovery till 2024.
Yeah, it'd be interesting to see, do we get to a point where this summer season, this sort of recovery window, this Santa Claus moment actually arrives in the summer or not? Let's go to the survey question of the day and see where the rest of the room thinks about this on a sort of bigger level. Last week, the IEA revised down 21 demand recovery for a fourth month in a row, down to 5.4 million barrels a day, of which it also included in its report that 1 million barrel a day decline in demand in the first quarter. So they're expecting a significant demand recovery in Q3, 4. But my question to the room is, do you expect this trend to continue over the coming months, where the IEA continues to revise down its demand recovery for 2021? Do you expect this trend to continue? Yes or no? Omar, beginning of the week, Monday morning, here we are, markets looking very strong out of Asia, Asian equities hitting records above 30,000 on the Nikkei, not seen for 3 decades or more. What do you look for the rest of the week and what will guide it? You're on mute, Omar.
I think basically, same stuff. So WTI is, let's call it $61 or so. The S&P 39.50. Would it be nice to get a dip? Yes. Do I think that we're going to get major corrections from here? No. More likely than not, maybe.
If you don't get a dip, Omar, does it make a major correction more likely or less likely?
No, more likely over time. But the point I'm trying to make is the higher we go, the higher the level of that dip will be. So from 65, $10 down is 55. From 60, it's 50, et cetera, et cetera. I think it's more reasonable with the amount of buying pressure, if you like, that I see, that it comes to that higher level, which is not, it's always impossible to pick a peak. So as long as the market is trending, as long as it's in a nice, move channel up, whatever you want to call it, then there's no reason to fight this. But I think, the next kind of major dip for crude is what's important also is that I think that this is the initial push up we've seen from $33. So the second push down, the first push down that we're going to see is going to lead, I think, to a very strong wave to the upside, basically, on crude.
Not this week.
No, not this week. This who knows? Well, who knows what's going to happen tomorrow? Maybe we get like a new Ebola virus and
well, I mean, the variant from wherever, the Lycée in London, I don't know. The Mike McGlone, your outlook for the week ahead. Obviously, all things US, the politics continue to entertain. Mike.
Yeah, we'll be much less entertained than the last administration. So I don't know so much about the politics, except that I know they're going to keep a massive stimulus, which is good for markets. But next $10 in WTI, I think, will be closer to 50 rather than 70. 70 be too significant. And I can't, I have to be very careful being bullish crude oil just because the stock market's going up. To me, that's the problem with the system. And at some point, there's going to be a pretty significant reset. And that's why I stick with gold and Bitcoin as the better and more likely markets to continue rising.
Okay, let's get the survey result before giving Amrita the last word this morning. Do you expect this trend to continue over the coming months? Yes, IEA is going to continue revising down its demand recovery 2-to-1 in this room at least. Amrita, your thoughts for the week ahead?
I think it is absolutely momentum driven. And look, I mean, should crude oil purely based on fundamentals be at $60? Probably not, but every single asset price is inflated. So you have to look at crude in that context. So unless and until the Fed is, starting to talk about interest rates hike or purchases kind of slowing down, why should it come off, right? You need a catalyst to come off. And I think that's where I will have to agree with Omar in this, is that, I mean, yes, fundamentals aren't like perfectly rosy. Yes, we have spare capacity, but until and unless OPEC decide to bring that back, and they will bring it back gradually, I mean, it's hard to see why prices are going to come off. I think we can't just expect this to rally every single day. We need to consolidate. We'll probably pull back a little bit as well, but it would be hard, very, very hard to call the top, at least this week, especially until and unless we get the cold kind of front out US. And now we've had the Japanese earthquake as well. And that is likely to, again, boost Japanese demand for liquids burn as well, given they've shut in power plants. So I would say I'd still remain bullish this week than bearish.
Yeah, I would agree with that as well, based on the Japan issue, also the US issue with the stimulus now looking much more imminent, given the Trump trial is over and it's not going to delay or clog up politics in Washington, and the Democrats will start pushing for that outcome. But that's a wrap for this morning. I'd like to thank Amrita for joining us for the first time. Hopefully you'll be back, Amrita. Thanks for getting up early. It's a nice sunrise in London. Mike McGlone, as always, checking in from New York. We really appreciate that. Omar in Dubai, have a great day. Everybody have a great week, and we'll catch up with you in the coming days. All the best. Thank you.
Thank you.
Thank you.